What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. Before we get going, I'd like to make your attention to the newsletter that has started. If you're interested in receiving 5 to 10 swing trade ideas, head on into the link in the description of the video. It's the first link. Enter your email address, and I'll be sure to get those swing trade ideas out to you Sunday night. It's getting pretty late in the night now. I was busy in New York, actually, the financial capital of the world, this weekend, so that's why this video is coming out a little later. Anyways, without further ado, let's get into the analysis and talk about the broad market. Alrighty, so as always, we're starting off with our SPY weekly chart. You can see we have a nice bullish green candle here, which was backed by our previous week. You can see it's also a green bullish candle that's similar in size to the week before that. When that happens in weeks stack like this, we normally put the weight in the forward week, which was green. So again, no surprise that we have a green break above our highs here. And again, just noting that the weekly bar is bullish. A lot of this is caused by a gap that we'll check out now. So zooming in, you can see a little bit more context here. It does look like the gap filled here, but if you look at the SPX, for example, it did not fill, and there's a large gap here. However, again, we're now above our area of highs over here. We broke out to the upside. I think right now the easy target is back to all-time highs here at 302. I think the next stop is sort of 300, where we'll see a little bit of psychological resistance. You can see after this large move, the market sort of had to digest it there on Friday. But I think, like I said, the target is 302 on the upside. Any sort of resistance that, there's not a lot of resistance in this very emotional selling period. I think any sort of resistance that puts us back down into the range is a very bearish signal. If we get back into some of this price chop, then I would target this trend line on the downside. Anything, if that gets violated, is obviously this level here at 281.22 and the 200 SMA, but that's quite a ways on the downside. I think the focus here is on the upside at 302, seeing a retest of that high, and if we get a double top here, then the market might roll over. If we see it move through this high, then we're looking at this resistance trend line to come into play. Next up, we have the Qs. You can see that we have our nice gap here left unfilled, which is what SPY technically should look like if you're looking at SPX, for example. But we are sitting right above, and we did find support there on Friday afternoon at our 191 level. I think, again, the target is the all-time high here at 195.55, and a potential move. I don't think 200 is quite in the books yet. We're trying to find a resistance here. That would be some sort of ascending resistance trend line that would look something like this. If we draw in our highs to our highs, we see something like that. So I don't think we quite go to 200 and make it to this resistance trend line. I think we sort of top out with a double top here at 195.55, and then our references on the downside are mapped out: 191, 188, the top of the zone for this sort of chop area. And then if we do see a move back down into that area, we're looking for a support trend line to come into play. Anything lower than that is some of these lows in here, and then the 200 SMA as that starts to catch up with those lows. IWM is interesting just in the fact that it still hasn't made as monstrous as a move to the upside as did the rest of our major indexes. You can see we're still running into this thick resistance zone that we talked about. The 50 and the 200 SMA are both combining to sort of beat the prices back down. We have a big wick to the upside, topping out at the 50 and then closing below the 200, and then the same thing on Friday. A wick didn't get to the 50 but closing below the 200 there, maybe a back test of this trend line. But important to note is that if we zoom out, we're still not even close to what would be comparable in the other indexes to the all-time highs. You can see this resistance trend line is very strong and intact. We're not even up to this resistance zone that we saw all this topping action at. I think this one's still much weaker. And if you want to look at that as a signal to what the rest of the market may do, when it approaches some of those all-time highs, then certainly use this as an indicator. Maybe we don't have the strength to push through the all-time highs in the majors as in SPY and the Qs, but IWM, seeing that we're much lower here, maybe it's an earlier sign of a reversal. So keep that in mind. Things are mapped out for us. Supports on the downside at 144, resistance on the upside. This one's pretty major here, this resistance trend line. If that comes into play this week, we're looking at 155-ish to 153-ish, depending on what time of the week. Quickly going through our companies now. Apple, again, not quite at the high here, the swing high. But if it does get out of this sort of resistance zone here at 215, we are looking for a move up to this high. We can draw in some horizontal resistance there. That's coming into play right at 221.37, high of that candle. But again, first we have to get through this 215. Anything on the downside, we want to see the 50 SMA act as support. A back test of this could happen. However, the 50 SMA is more likely to act as support, as you've seen it here. Multiple days act as a nice spot for the price to bounce. If that gives, some of these areas and sets of lows could act as support around here at 203. It looks like an area to me. Anything lower than that, maybe 199, the sort of $200 level, as you can see some bottoms in here. And then after that, we're looking at 192. Netflix is still looking relatively weak. You can see that even though the market gapped up big on Thursday and Friday and held the gap, you can see Netflix still had a nice green day on Thursday, but we aren't really making any headway in the upwards direction. Our downtrend is still very much intact. We're very tight and narrowing in range. You can see that we're still within this falling wedge. So what happens here is sort of going to be interesting, whether we break out to the upside and follow the market to the upside into this resistance zone around here at 310 to 316, or if we continue downwards and retest the bottom support trend line in this falling wedge. You can see anything lower than that, if we get a break there, we're looking at 231. Again, that's quite a ways away, but I see Netflix is pretty bearish considering what the market has done this past week. Tesla has begun to break trend. You can see the resistance trend line here has been broken. We're sort of seeing some tops happen right in here. I think the key break is anything above this 230-ish area, and then a move higher than the 50 SMA. You can see the rejection there on Monday or Tuesday, was it? We got to get above the 50 SMA. From there, we can target some of these other areas of the chart, such as 239, 247, and sort of start reversing this trend. We want to see our set of lows hold in here. We want to see 219.50-ish hold as a support zone. If we break back down below that, I wouldn't be surprised to see Tesla come back down to 211 and sort of start getting battered back down by the trend line. So keep those areas in mind up and down. BABA looks interesting to me here. You can see all these touches to the resistance trend line. 1, 2-ish, 3, 4, 5, 6, 7, 8, now 9, 10. So a bunch of knocks on this door essentially at 179.37. Yep, that's it. And we have this rising support trend line. I think it looks ripe for a breakout to the upside. On that breakout, I would target this resistance trend line. This one comes from our past historic price action. There we go. So looking for this as a target to the upside. Again, if we see any sort of pullback into this area, I would consider that a buy. The 50 SMA and 200 SMA are starting to rise upward. That's also a good signal that the trend is starting to shift in favor of the bulls. So again, pull back into here with a target of this area. If this fails, though, then we're looking at 164.08 on the downside. Facebook still not quite up to or out of really this consolidation zone. You can see we still are at our highs here in 50 SMA, even though the market gapped up so big on Thursday, Friday. So one thing to note here is you want to compare what you're looking at to how the overall market reacted on that day. So again, I see this as a sign of relative weakness. We sort of got rejected at our resistance here in 50 SMA. So Facebook looks kind of weak to me. I would target a move back down into this support trend line. If that wants to hold, then a potential bounce and retest of that 50. If we break through the 50 though, I wouldn't be surprised to see a move up through sort of this emotional selling here, to see a move sort of, I don't know, 200 might be a better target than this high of 205. 200 just because it seems like price could run out of steam. You can see some resistance up in this area. That would be my first target before the 205. 205 seems ambitious right off the bat, so target 200 on the upside and a break of the 50. But again, I think it looks relatively weak compared to what the market did. NVDA, on the other hand, looks pretty good. We get a breakout above our resistance trend line, so that to me is a bullish signal, obviously. Next thing we want to see is a move higher. If we scrunch up the chart a little bit and look for some next points of resistance, you can see we have a little ways to go until we hit. So a little ways to go before we see 185 as resistance, and then anything after that is 192.95, 193 just about, based on how this one moves. Again, it really respects its supports and resistance as well, so I wouldn't be surprised to see it move up to here, maybe a little pullback to 178, a move higher, then a pullback to 185, so on and so forth, and just sort of climb this ladder if this uptrend wants to hold. And again, depending on what the market wants to do. But you can see it's right up there at its swing highs with the market, again, bullish gap up, and holding that gap on Friday. Microsoft, to me, has been bullish for a very long time. Nice period of consolidation that we see here. We're starting to move into those all-time highs, again, with the market gapping up and showing some strength. That, to me, is a solid sign. We're holding on to this support here at 139.24. Next move is obviously targeting this 141.68. Anything after that is whole and half dollars as resistance on the way up. If we see any sort of pullback, again, this trend line is certainly buyable. It has been for a very long time now. You can see any sort of move into it or even towards it really has produced a nice bounce and move in the upwards direction. I think this consolidation with the market is just a healthy period of consolidation for the stock, and again, the move will be in the upwards direction. So I was pretty bearish on Amazon considering all the touches of this support horizontal price level. That and considering that when the market was moving all the way back up to the top of its consolidation zone, Amazon was sort of lagging behind, but obviously finishing the week, you can see that we are just at the top of the box now. I'd say based on what the market does, we could see a potential move to the 50 SMA somewhere in here. Again, this is very emotional selling, these sort of days that were just reckless down, almost straight down. So I wouldn't be surprised to see a very, very easy move up to this 50 SMA as there's not very many strong shorts in here. So that could be a potential target on the upside. If we get a failure here, look to retest this 1833 level as support. If we come back down, we see the move up, retest as support and confirmation. Again, you can retest and retarget this area and further on the move back up. But again, this is going to sort of depend on what the market does as a whole. Again, keep in mind where the market is as a whole compared to where Amazon is. The market's sort of aiming for these all-time highs. I don't think that Amazon is quite at the same level as the market in terms of getting to its all-time highs. So that being said, it could be potentially relatively weak and get rejected here at the 50 and then retest the lower end of the consolidation zone. That's going to wrap up this week's episode of the Weekly Watchlist. Again, I apologize for the lateness and delay. I was in New York all weekend enjoying the financial capital of the world. That being said, I wish you a green trading week.